Hey traders, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and subscribe. This is the weekly watch list for December 31st, 2022. 1 month down, 11 to go. This month has flown by, but we're going to kind of go over what the market did this week, what I think it'll do next week, and what the support and resistance levels are that we'll be looking for. But before I get into that, check this out. Make sure you check out my website, daytradingfearless.com, to sign up for the $99 lifetime subscription special for the weekly S&P E-mini trade zones. These are zones where I give you resistance, support, open gaps, and open VPOCs for the following week trading. You also, in the member section, will receive a 2-hour trade zone training video course where I teach you everything about the trade zones, how to draw them, so you could trade any stock, future, or cryptocurrency. And you also get the member section with all the resistance, support levels, and things like that to draw on any chart. So make sure you check it out. Links down below, but right back to the video. Okay, so let's get into the weekly watch list for January 31st, 2022. Last week, I kind of was bearish on the market, and the market actually went lower. Monday was a great day for selling premium. When we were near the lows, I was selling the 3,200 puts for like $1. Okay, that's how that had literally 2 days left. Okay, that is how you take advantage of implied volatility. Watch the VIX. The VIX shot all the way up to about 38, 39 on that. And when you see expansion like that, where there's so much fear, usually that signals the bottom, and that's where you can really capture that high IV. It only happens a couple times a year, because I'll tell you right now, when we came back down here this morning, okay, I was looking at next week, like maybe even next Wednesday, those 3,200 puts, the volatility, okay, with the VIX only being 31, at that moment, you could probably only sell them for about 10 cents. Right. So that's when you start to see these things in real time, you start to understand, okay, hey, lows are in, things are going on. And this is why I want to sell it. But today is kind of, the market looked like it was going to break down, never broke down. And with that being said, the volatility, even though the VIX was still high, it was not anything like crazy, because I could go to those same 3,200 puts, but this time with like 5 days out, and collect 10 cents. So just something to be aware of in these downfalls. Don't be fearful of them. Look at them as opportunity to make a lot of money very quickly, because on this move, I started selling around the 42.40 to the 42.20 levels. I just started hitting those 32s, the 35s, all those. And I was collecting a couple dollars of premium on the 35s, $1, because I want to be right. We don't know what's going to happen, how much farther we're going to go. So you also have to protect your capital and kind of understand the move could keep going. But with that being said, by the end of the day, I was able to buy everything back literally for 10 cents on that big, massive rally. So just kind of want to give you guys, think about looking at put selling the next time we are making new lows and you feel fearful. Okay, that's kind of the gist of that little rant. But with that being said, what is the market going to do? Well, we have volatility. Big ups, big downs, big ups, big downs. Right now, my waterfall, reverse waterfall, it keeps chopping around. These are the times where you stay out of the market, if you're trying to play the waterfall or the reverse waterfall, this is just more understand what's going on. We actually have a bear flag starting to form right here. Let's do this. We could kind of say here is our flag, right? It's starting to form. Nice high volume node. I think we're going to have we'll call it a kangaroo market, right? Where it just goes up and down, up and down. That's what's going on now. I think over the next 6 months, as we zoom out, I think the low will be the 4,000 level. The highs will probably be maybe 45, 4,600. And I will not be surprised if we're right back here at 4,400 sometime in June this year. I think the market structure has really kind of broken down. But with that being said, we will have to see what happens, but let's take a look at some levels to the downside. Let's grab the fib extension, go from this high right here to this low, and then right back up. And these are the levels we're going to be looking to the downside, and look at how they match up almost perfect, right? Low volume node right around the 4,000. The 127 is a high volume node right around 4,150. So these are the levels I'm going to be looking for. On the upside, I would probably say this low volume node will match up with the 50 period moving average right around the 45.50 level if we get there, but I personally don't think so. I think the market is probably going to go lower at some point than where it was today, but we will have to wait and see. Let's take a look at the NQ. Kind of broke down from this channel, same exact thing, just kind of sideways. I kind of say, hey, watch this 1340, right? Support level, came right down into it, bounced, same exact thing, kind of going on. If we grab our fib extension from high to low, these are the levels we'd be looking for. Now, the NASDAQ is a little frothier than anything else, but look at this. The 200 from this flag pretty much lands right at the point of control of this entire market profile right here, right? It's also these lows. So I think somewhere around the 13,000 level on NASDAQ, we could see if we take out the lows. Just keep an eye on that. Crude oil. Well, if you've been following me and listening to these for a while, I've been saying I think we're going to be having a $90 oil. Guess what? We hit 89. Close enough for me. There is a little bit of a divergence going on the RSI. But with that being said, anything's possible with what's going on with Russia and Ukraine. So until anything changes, probably higher. There really isn't any excess up there on crude oil. So let's take a look at Bitcoin. So last weekend, I called these levels where I think we were going. I said, watch for the gap fill, and look at that. A flush exactly to the gap fill. Technical analysis, people. Read what the charts are telling you, not your emotions. I've been saying this for a while. Bitcoin is been broken for a while. We've been making lower highs, lower lows. Every time it bounces, don't get all excited like this is it. It's going back to 70,000 until this entire trend gets reversed. We're in the bear market. We with a crypto. All my crypto's getting beat up, but I'm buying because I believe in good quality projects. That's why I'm buying into things that I believe that I could get very cheaply, that on any bounces, if we get a significant bounce, right? If we got maybe a $5,000 or $10,000 bounce, I could make 5-10x on those. And you guys know one of them is Zombie Inu. The other I'm building a big position in is Cardano. I really, really like Cardano longer term. Again, these are couple year holds type of things. So let's see where we are in a few years with it. But getting back to Bitcoin, just kind of sideways action, bear flag, building out a nice clean market profile. But I do think we're at least going to retest these lows. And then ultimately, I think my ultimate target is around the 20,000 of a Bitcoin before we see any massive significant bounces. So we will see what happens there. To go through a gold. Gold sideways, really nothing going on. Lower, kind of just a chop fest, building out the market profile there. So nothing on gold. It's been like that for a while. Silver, if silver takes out these lows, watch out below. I think we're definitely going to this 1882, because remember, it's from this high all the way down to this low, this entire leg, and these are the fib extensions for that if you want to write them down, but that's what's going on there. And then finally, AAPL. Apple beat earnings and the market and kind of is kicking the trend of the overall market, but I do kind of think that Apple may get caught up in the sell-off, but just won't get hurt as bad as everything else. So that's it. Don't want to make this video too long, but as always, thank you for watching. Make sure you guys are safe out there. Use stops. Don't get caught up in believing the markets can go one way or another. And remember, it's okay to be wrong. It's not okay to stay wrong. So with that being said, have a good weekend, and we'll talk to you soon.